The Informed Investor, thanks to Century 21. Smarter, bolder, faster. Go to century21.com.au.
Yes, Monday night, a car might be the second most expensive thing you purchase in your life. A property is the most expensive thing, and if you need advice, there's no one better than the chairman of Century 21. They are right around the country and in New Zealand. Charles Tarbey's in the studio with us. Good evening to you.
Good evening, Steve.
50% of Australians would consider buying a property overseas. Is that a risk, or is that, these days, is it okay if you do your homework?
Yeah, I remember when this happened back, GFC, and the prices of property in the US were like rock bottom. You'd like this one. You could buy a two-bedroom villa on the golf course in Las Vegas for $55,000 to $60,000. That's how.
I'm in. Send me the address.
That's what it was, of course. And the Australian dollar, of course, was it reached parity with the US dollar, so it all looked pretty good. But the problem was that there was a massive oversupply, and there was a significant issue with funding over there, with overfunding. I still remember the stories I read of a cherry-picking Mexican gentleman who managed to buy two properties on a salary of 20-odd thousand worth 800,000 each, and it was just the crazy way it was going. So the property prices were going to crash. Invariably, a lot now when you look at it now, so Steve, the property prices in the US are rising. They're sort of on the start of a boom, in some parts well on its way. But the problem is that if you bought over there and you didn't buy here in Australia in the last 6 or 7 years, you missed out on a significant amount of capital gain here. And we always advise people when they're buying property, even if they're, say, in Perth, be careful about buying in Brisbane, or if you're in Brisbane, be careful about buying in Perth. So I think the tyranny of distance for me is a real issue, and because real estate's such a massive investment, it can be such a big risk. I get a little bit frightened about advising people to buy overseas.
And countries do things very differently. I mean, I've got friends. I've got a mate of mine who has an apartment in France, and it took him the better part of a year to negotiate his way through the deal. Had to hire lawyers on the ground there to deal with the real estate agent. It was, quite tricky. I mean, he's happy he's made the investment, and he's now got it, rented out on Airbnb, and he uses it whenever he can.
Yeah.
But he's happy. Another friend of mine has been a long-time investor in Japan, where you can buy as a foreigner real estate in your own name, no problem. But I was playing golf with a bloke on Saturday whose brother-in-law bought property in Indonesia, in Bali, and has had a dreadful time of it, and has basically been ripped off by locals whose name it was in. And he's owed a huge amount of money by these people. They simply won't pay, even though he's taken them to court.
Yeah, and you lease property over there. You buy a long-term lease, unless you're a local, and that's part of the issue. When you think about people from China and Asia buying in Australia, which they readily do, I'd like to challenge people in Australia to go and try and buy in China. It's a completely different ballgame altogether. We make it so easy in this country, I guess, because we need some growth. We need people buying here because we need the building industry to continue. But sometimes the gates are far too widely open.
Yeah, now Kiwi Cousins have shut that loophole, haven't they?
They have
banned the foreign purchase of property in New Zealand.
They recognised it a little bit ahead of us here in Australia, and so subsequently, particularly with rural land, they were getting significantly bought out from rural. And as you know, the rural property in New Zealand is absolutely stunning, and you can see why people want to buy it when you look at what it's like in other countries, getting your money out and there. And a lot of people too, Steve, saw New Zealand as a way into Australia. So there are a lot of people living in Australia today that started their life in Asia, and the easiest way, or in India, and their easiest way to get into Australia was through New Zealand.
We've got a federal budget coming out tomorrow night, and clearly then you will have the night after, Labor will outline its financial plan for the country. Labor has, as a policy on the table, and they don't seem to be wanting to back away from it at all, the abolition, with a sunset clause in place, I must say, of negative gearing. What will that do to the property market?
It's been tested very quickly many years ago, and it caused a reasonable amount of damage very quickly, and it was reversed. The biggest concern that I have with it, and I understand why they're doing it, and I think people need to treat negative gearing like investors are in business. So, when you're in business, you make a loss or you make a gain, you pay tax, or you can write things off, and I think property investment is no different. I think what's happened with negative gearing, it just got a little bit, again, too open. And you saw recently, I remember us discussing this, about people taking trips up to Brisbane to see their investment property. And they were claiming it out on tax and having a holiday. Well, to me, that's not on. But with negative gearing, and your grandfather, for people in the past, all of a sudden you're creating a divide with investors. So those people that are grandfathered on investment properties, they're going to keep, they're going to hold. There's going to be no turnover, no change. And I think that when you create a divide in the community, particularly that way, it's going to be unusual. You can negatively gear on a new property, but you can't do it on older property. And I don't think it's appropriate. I think it needs to be treated like a business. And if Labor want to introduce it, they should change it. Change is fine, but removal is fraught with danger. You then create an environment where investors start to leave the market and go somewhere else, Steve, and then housing still needs to be provided. Who's going to do that? The various state governments and housing bodies associated with the government have not done a great job with it over the years, and I think it'll become a very costly exercise for any government that's in, far more costly than leaving negative gearing where it is.
We're talking to Charles Tarbey, Chairman of Century 21 Australasia, talking about governments and taxes. There's nothing more annoying than having to pay stamp duty when you buy a property. It's remained unchanged, we're told. This story was in the Telegraph, I think, last week, for 32 years.
Wow.
Housing prices have gone up in that period by 1,181%, and they're dragging in, I think last financial year, the New South Wales government alone took in $7.3 billion.
Yes, and they never talk about that too much. They haven't recognised the fact that people are starting to pay a lot of attention. That's like land tax, Steve. Why do we pay land tax? I'm not quite sure. I know it was introduced for some reason and has now become part of consolidated revenue, but you get nothing for it. They do nothing with it for people that own property. And stamp duty, for heaven's sake, you buy a medium price property in Sydney now and you're paying thousands upon thousands, and it's more than people can save. And so I think that the state governments need to have a really close look at it. But sadly, in many respects, it's become part of, again,
when
consolidated
you look at these
revenue.
figures, Charles, it's crazy. I mean, when the New South Wales transfer duty brackets were put into place back in 1986, so 32 years ago, the medium dwelling price, according to Core Logic in Sydney, was $80,675.
Yes. In that era, I was selling houses in the western suburbs of Sydney for anywhere from $27,500 to $43,000 was the price range of these new homes. So when you look at that same area now, and your average price is lowest price on those exact homes would have to be around $600 and up to $750. So there's a massive increase in stamp duty. But again, unless that money is that stamp duty is received and put back into housing, which I know it's not, you'd argue the case for it if the money was going back into housing to help people buy into their first properties, but that's not what's happening.
And these state governments get addicted to the revenue, don't they?
Yeah, they do. I mean, there are stamp duty concessions and there are, of course, grants for people buying first homes, but nowhere near the amount of money that they're taking out of the housing market.
What's happening with the market? We're heading in, obviously, to the colder months. Supply's probably down a bit, not as many places up for sale.
People start to slow down from that perspective, but we have an overload of stock still building up in the last few weeks, which I think will carry through winter, Steve, because we have now, as at today, 8.56% more residential stock across the nation than we had this time last year. And we have a significantly lower number of buyers in the marketplace and a lot less money coming out of Asia. The tap has been turning back on slowly for investors, but overall, with that high level of increased stock and low level interest from buyers, I think winter is going to be very cold. And I do think that people who are wanting to sell and people who do need to sell, if they're selling to buy somewhere else, they're probably going to be okay. If they're selling without buying somewhere else, they're probably going to find that the price of their property is lower in winter than it is right now.
Good on you. Thanks, Charles. I'll talk to you next week.
Thanks.
That's Charles Tarbey.
Thanks.
That's Charles.